Okay, so in this video, we are going to talk about the way markets move. Okay, we are going to talk about trending markets, ranging markets, and reversal markets. Now, the reason why you need to understand reversing markets is because, especially if you're day trading, um, in the mornings when the market opens, a lot of times the market will reverse. So you really have to understand that. And even when you're swing trading, it's still good to know when, it's a possibility that the market will reverse. Okay. Now, so let's go to the trending market. Now, also, before I get started, we're not really going to talk about ranging too much because I have a separate video for that. Okay. So let's get into trending. Now, when the market is trending, guys, we are looking for higher highs and higher lows. Okay. So when the market is going up, okay, and it pulls back, we call this right here, this pivot right here, a swing high. Okay. This is the high because it created a high. Okay. Now, when it goes down, okay, we call this a swing low. Okay. Now, you see how the market broke this high right here and created a new high? Well, this is a new swing high. Okay. And it pulls back and created another swing low. Okay. So every time the market creates a new high, okay, that's a trending market. Okay. And that's what we want to see when the market is trending. Same thing when the market is going down. Okay. We want the market to make new lows. Okay. Now this pullback right here, when the market pulls back, we call this a swing high, right? And this is a new low, swing low. Okay. It pulls back, another swing high. Okay. Another low. So we want the market to continue to make new lows to see if the market is trending. Okay. And when you see this, then you can say, okay, now the market is trending. When we see new highs or new lows. Okay. Now, for a ranging market, the market is not going anywhere. It's just pretty much going sideways. Okay. So the market is going up, it's going down. Okay. It's going up, it's going down, it's going up, it's going down, it's going up. Okay. So we are not going anywhere, and we are, I'm definitely going to show you guys some examples. I'm just drawing it out right now, but this is pretty much the concept of ranging markets and trending markets. Okay. Now with trending markets, guys, when it pulls back, okay, when we go up like this is usually the impulse move. Okay. A very strong move. Okay. And then when it pulls back, okay, it's not a smooth line. Okay. Sometimes it could be a smooth line, but usually a pullback might look like this. Okay. And then we will see a breakout out of this consolidation right here. This is called consolidation. Okay. We will probably see another impulse move out of that consolidation. Okay. And like I said before, I'm going to show you guys some examples. So when the market pulls back, guys, and it's pulling back, a lot of times it will correct. We call this corrections. Okay. And this is pretty much the market pausing. Some people are taking some profits, but overall it's pausing for the next move. It's waiting to build up for that next impulse. Okay. So a lot of times you will see that when the market is trending. Same thing when the market is going down, you will see it correct like this. Okay. And give you that nice impulse move out of that correction. Come back, give you another correction, boom. Okay, so let me show you guys some examples now. Okay, so this is a market trending down. Okay, now we have the impulse move right here, guys. So the market's going down right here, and then when it pulls back, okay, you notice how it's giving this nice little correction right here, and then it gives you this another impulse move, and then we have another correction right here, guys. Okay. Now I want you guys to notice that the corrections, if you notice, they look very weak. Okay. You can tell that the market doesn't want to, reverse and go higher. Okay. The buyers are not there. You can tell by, the way it's moving. And then out of this correction, We have an impulse move, and guess what, guys? Another correction. You can tell, like I said, you can tell this the market is weak. Okay, we're looking for this zigzag pattern. Okay, and then it creates another impulse move. So usually that's how the market moves. Now, sometimes it won't give you that zigzag pattern, but you will see it. Okay, if you trade the markets. So let me show you guys another example. Here we have an uptrend. Okay, the market is going up. Okay, and we have this nice impulse move. It's going down, it's correcting, going down, correcting. Then it breaks out of this correction, give you a nice impulse move, and then give you this big correction right here, and it breaks out of this correction. Okay, so I just want you guys to realize or recognize when the market is correcting and when it's basically breaking out of the correction. Okay, when you have that breakout of this correction, you'll see this nice strong move. Okay, a lot of green candles in a row. But when the market is pausing and is correcting, a lot of times when it's correcting, for the most part, that correction usually leads up to a another move to the upside. Okay, so when you see the market correcting, expect another move to the upside. Okay, does it happen all the time? Of course not, but that's what it usually means. Okay, it usually means the market is pausing, and it's basically waiting for another move to the upside, or vice versa, another move to the downside. Okay. Now with corrections, not all corrections, but some corrections, a lot of times you notice that you can connect the highs, or vice versa. If the market is going down, you can actually connect the lows. So when I see the market going down like this, and I see the lows, actually the highs, are basically giving me this trend line connection. Okay, notice how this high, this high, this high, this high, and this high, they all connect. Okay, if you draw this trend line right here. Okay, usually this means that the market is correcting. Okay, and most likely is going to break out of that correction. Okay, let me show you guys another example. Here is a bullish example. Okay, we have a low right here, a low right here, a low right here. You can take a line right here, connect it. Notice how we could connect these lows. Okay, and usually when I see this, okay, and we can actually connect these lows like that, I know, okay, the market is correcting, and most likely we're going to break out to the upside. Okay, so a lot of times you can actually connect the lows. Now, like I said, it's not going to happen all the time, but sometimes you will see the lows or the highs basically connecting together, and you can see, okay, this is a correction right here. All right. Okay, so now we are going to talk about strong trends. When I see the market holding the 20 moving average, okay, I know that it's a strong trend. Okay, I know some of you guys going to ask me, hey, are you using the SMA or EMA? It doesn't matter, guys. It doesn't matter if you're using the EMA or the SMA when it comes to moving average. Me personally, I use the 20 or the 21 moving average. Okay, the EMA. But when you see, okay, the moving average holding, actually price holding that 20 moving average, guys, that means that the market is very strong. Let me show you guys another example. Again, we have the market bouncing off the 21 EMA, okay, or the 20 EMA, and even though it breaks it a little bit, it bounced off of it and then it continues to go back up. Okay. Now, when I notice this, guys, in the morning time, when I see the market, trending up, bouncing off the 20 EMA, okay, and it's around 11:30, I'm saying to myself, this is a strong trend, and most likely it's going to continue to be strong the rest of the day. Okay, so that's strong trends. The same thing if you're swing trading and you're looking at the market, and is holding that 20 EMA, is a very strong trend. Now that's strong trends. Now I want to show you guys weak trends. Okay, now this trend right here, if you look at it, we are trending down. Okay, we're making lower lows, lower highs. Okay, notice lower lows, right? Okay, lower lows, lower lows. Okay, lower highs. Definition of a trend. But I want to show you guys how weak this trend is. Okay, just this trend is very weak. Look how it's going down. Okay, and we having deep pullbacks, right? That's a one good sign of a weak trend. Deep pullbacks. Okay, we're going down, having a nice deep pullback, right? We're going down, another pullback right here, down. Look at this deep pullback right here. It went down again, another deep pullback, and it went down. So when you're dealing with these type of trends, guys, usually you can trade both sides. So let me show you guys real quick what I'm talking about. Okay, so when you have a trend like this, usually, okay, there's buyers and sellers. So this is like a big range. Okay, so let me show you guys real quick. So look at this trend right here, guys. This is a big range. So buyers and sellers, okay, can actually make money in this type of trend right here. Okay, because we have deep pullbacks and we have you know, the market selling off at the highs, and then when we get to the lows, buyers are buying it up. Okay, so you can make money on the short side, okay, short in the market, and you can make money on the buy side when it creates these new lows. Okay, now me personally, if the market is trending down, I want to go with the trend. I'm not really a counter trend trader. I like to go with the trend, even though in this type of market right here, you can actually, you know, play both sides, where you can play the tops, you can play the bottoms. But overall, I like to play, you know, the range. I'm sorry, I like to play the trend. Okay, so this one, I would just still short it and treat it like a trend. But just to let you guys know that when it hits or creates a new low, it's a strong possibility we can actually pull back and make a deep pullback. Okay, with these type of trends right here. Let me show you guys another example. Again, another weak trend. This right here, we have basically the market going up, deep pullback, going up again. Okay, a pullback, going up, gave us a nice deep pullback, nice correction, but it's still deep pullback, going up, choppy. This overall, this is a weak market. Okay, so that's pretty much weak trends. If the market's doing deep pullbacks, not really going anywhere, every time we make a new high or low, it creates these deep pullbacks. That's you know, a sign of a weak trend. Okay, guys, now we're going to talk about impulses, right? When I look at the market, I'm always looking for an impulse move, okay, to the upside. That's telling me that smart money is coming in the market. Okay, and it's a strong possibility we will create a new high. So let me show you guys another example of an impulse. Again, guys, okay, we have a nice sharp move up, pulled back. You can tell that it's correcting right here, and it gives you another nice move up to the upside. Okay, we are always looking for these impulses, and we're looking for smart money to come in the market, because these guys, they move the market. So always train your eyes to look for these big impulses, okay, because it's a strong possibility we will get a correction and another impulse. Okay, now I want to show you guys where we have an impulse, okay, and then next thing you know, we have another impulse in the opposite direction. So let's look at that. Okay, guys, so here is an example where we have a impulse right here, okay, but we have no correction, okay, and then we have another impulse in the opposite direction. So usually when I see something like this, we have an impulse and then another impulse in the opposite direction. The last one, which is the up move right here, okay, that's the one that I'm really paying attention to. That's a strong possibility that this is the real move. Okay, this move right here, this up move right here is the real move. Okay, because we should not get this V pattern right here. Okay, if this impulse move was real, we should get at least some type of correction Okay, even if it wants to pull back, it shouldn't pull back all the way up like this. Okay, so when we get this V-shaped correction like this, me personally, I'm looking for a continuation to the upside. So you can tell right here, okay, we have this V shape. Okay, it popped up right here, it pulled back, okay, and it gave you opportunities to go long. Okay, so let me show you guys another example. Here's another example, a nice little, and this is right at support. Okay, and you will see this a lot of times. Okay, they will create an impulse move right at support, and we have a nice V-shaped recovery. Okay, bouncing off. Okay, so the way I'm looking at this is, well, this pullback right here is not really enough to say, okay, this is a V-shaped recovery. But when you see this market go straight up like this, then you can say, okay, now I see it's a strong possibility they want to most likely bring this market up. Okay, so when I see this, I'm definitely expecting another high to the upside, because this is not the real move. The real move is this right here, the bounce. Okay, let me show you guys another example. Okay, here's another example. We have a nice sharp move to the downside, but okay, another sharp move to the upside. Like I said before, this move right here, a possibility that we can actually, reverse still right here. But when you see this move right here, this almost like a full recovery right here, I'm always expecting a pullback, okay, and then a new high. Okay, so we are going to talk about reversing markets. Now, the first thing I want you guys to know is the head and shoulder pattern. Okay, we have the inverse head and shoulders and we have the regular head and shoulders. So let me show you a head and shoulder pattern real quick. Okay, so the head and shoulder pattern looks like this. You usually have the head poking out. Okay, you have the left shoulder. Okay, and then you have the right shoulder. Now, a lot of times the right shoulder does not come, okay, right at the left shoulder. Okay, sometimes it comes at the close of the candle. Okay, a lot of times the market will come to the close of that candle, okay, and bounce off and reject that and then continue to go back down. Okay, but this is the pattern right here. We're looking for a head, okay, the middle, the left shoulder, and the right shoulder. Okay, and then it's an inverse head and shoulder, which is an upside down picture. Okay, so it's the same pattern, but it's upside down. Okay, so let me show you guys some examples of an inverse head and shoulders. Okay, guys, so this is an inverse head and shoulders. We have right here, okay, we have the head, we have a left shoulder right here, and we have a right shoulder right here. Okay, a lot of times when price comes back to the left shoulder, you will see it bounce off this right here and it creates support right here. All right, so when you see this type of pattern, expect the market to either reverse or at least bounce off these areas right here. Okay, let me show you guys another example. Okay, so we have another inverse. We got the head right here, we have a left shoulder right here, and we have the right shoulder right here. Like I said before, it's not going to be perfect all the time. A lot of times price will either go to the low or a lot of times go to the close of the candle. Okay, and just go to the close of the candle and bounce off that and continue to reverse. So that's one pattern that we are looking at for reversals when it comes to day trading and swing trading. Okay, so the next reversal we are going to look at is fake breakouts. When you're day trading, especially day trading the indices, right? When the market opens at 9:30, you're gonna see a lot of fake breakouts. Not all the time, but a lot of times you will see fake breakouts. Okay, and you have to just understand that if it breaks out and it pulls back a lot, that you could tell that was a fake breakout. And me personally, I'm looking for the opposite direction. So this, we was going up. Okay, that was fake breakout. They trapped the longs, okay, and they shot right back down. So I'm looking for a sell, and I actually did take a sell right here. All right, let me show you guys another example of a fake breakout. Again, in the morning when the market opened, we had a nice little fake breakout right here. It came back down, trapped the longs, and basically, me personally, when it does that, I'm looking for shorts. Okay, vice versa, if it's doing that to the long side, and it traps the sellers I'm looking to buy. Okay, so in the morning time, if you're day trading, especially if you're day trading, you know, the indices, which is NASDAQ, the Dow, US 30, the Russell, S&P 500. When the market opens, a lot of times you will see fake breakouts, and make sure that you guys are aware of those fake breakouts. So that's another type of reversal. And the last one we're going to talk about, guys, is a trend line break. So right here, guys, we have the market doing nothing, and then all of a sudden, okay, we have a break of this, okay, this nice little resistance line right here. We broke it right here, we pulled back to it, and we went back up. Okay, so when you see a break like this, okay, you want to say, all right, it looks like the market is breaking. I want to, you know, go with the longs, and I'm looking to get in the market. Let me show you guys some more examples. Here's another example. Okay, we have a nice little trend line right here. It breaks the trend line. A lot of times when it breaks that trend line, guys, I want to see a nice break. Okay, I don't want to see a small tiny break. Even this break wasn't, you know, all that. It was decent enough, but wasn't all that. But when I see this right here, okay, that's when I'm very convinced. Okay, so me personally, I want to see, you know, a nice break of that trend line. Okay, and then I will start to look for you know, short opportunities if it's, you know, if it's breaking down. Vice versa, if it's going up, I will look for long opportunities. All right, let me show you guys another example. Here's another example, guys. We have a nice little break, right? It actually did a false break right here. You notice how, you know, basically we had this break right here, false break, and then we had like a V-shaped recovery. Broke it with a lot of force, okay? And then pulled back. I'm looking for buying opportunities, okay, when I see things like this, right? So those are the three type of reversals that we are going to look at when we trade. Head and shoulders, okay, of course the inverse head and shoulder, a fake breakout, especially in the morning time if you're day trading, and a trend line break or some type of line break, okay, and it's breaking to the upside or to the downside with a lot of force, and we're looking for buying or selling opportunities after the break. Okay, now I want to show you guys one more example. Okay, guys, we have a market and we're trending up, okay, and we have a trend line break. Now notice how we broke it a lot. So I like this break right here, okay, and then we pull back to the breakout, okay, and we sold off. Now I want to ask you guys a question, okay. When it breaks the trend line like this, okay, and it's trending down like this, is this a bearish trend now? All right, are we in a bear market? And when I mean bear market, meaning that, is this a downtrend? Okay, so remember, we are going up right here, okay. Now we broke this trend line. Now we are going down. Now, is this down move a downtrend? Is it a bearish trend? And the answer is no, because we didn't break the low. You see this low right here? We didn't break this low. So no matter if you see a deep pullback, okay, in an uptrend or vice versa, okay, if we didn't break this low right here, we are still in the uptrend. Okay, so you still have to realize, okay, if the market is going down, okay, and we see that it's a strong possibility, okay, the market might break up to the upside again, okay, now we got to start looking for longs. All right, so keep that in mind. Just because you see it breaks the trend line doesn't mean that all of a sudden we're going to basically have a bearish trend now. No, this might just be a temporary pullback just to go right back up, okay? And like I said, later on in this course, I'm going to show you guys how to trade that, but just let you guys know, keep that in mind. So this is the end of this video, and I will see you guys in the next video.